What exactly is the difference between a value-added tax, usually called VAT, and a sales tax? Are they basically the same thing with different names, or do they actually work in completely different ways? And why do some countries prefer one system over the other? In this video, we're going to explain what both taxes are, we'll compare them using the exact same example, go through the advantages and disadvantages for not only consumers, but also for businesses and governments. Finally, we'll wrap everything up in a way that's easy to remember. And so, by the end of this video, you'll understand exactly why the same product can feel completely different to buy, depending on where you are in the world. Let's start with VAT, also known as value-added tax. The name often sounds more complicated than it really is. Basically, VAT is a tax that gets collected gradually as a product moves through the process of being made and sold. In other words, instead of being charged up once when the customer buys the final product, VAT gets applied at different stages whenever value is added to something. That value-added part is important. If a business takes raw materials and turns them into something more valuable, or improves a product before selling it, tax is applied to the extra value created during that step. Let's see a simple example to really understand. Imagine someone is making a wooden table, and let's assume the country has a VAT rate is 10%. First, a lumber company sells wood to a furniture manufacturer for $100. Since VAT applies, the manufacturer pays $110 total, with $10 being the VAT tax. On the next step, the manufacturer turns that wood into a table and sells it to a furniture store for $300 before tax. Since the manufacturer sells the table at $200 more than he bought it, the value-added part is $200, and so the value-added part that goes to the government is $20. Finally, the furniture store sells the finished table to a customer for $400. Because the furniture store added $100 in value and the VAT rate is still 10%, $10 will go back to the government. And so, as you can see, in total the government will have collected $40 in taxes in this process. The VAT system is extremely common around the world. Actually, most countries in Europe use VAT at the time of this video. Countries like Germany, France, Spain, or even the United Kingdom. It's also widely used across Asia, Africa, and Latin America. I'm talking about countries like India, Australia, and many others, although some places call it a goods and services tax, or GST. And in most of these countries, the VAT is usually already in the price when you buy a product, and so you don't even notice it. Now let's compare that to sales tax, because this is where things start to look very different. Sales tax has the same general purpose as VAT, meaning it is revenue the government collects by taxing you from your purchases. But for many people, sales tax works in a much simpler way. Meaning, instead of charging tax at different stages while a product is being made and moved around, sales tax usually gets charged only once, right at the very end when the final customer buys a final product. Businesses buying materials from one another generally don't pay the final tax because the tax only appears when someone purchases the finished item for personal use. If it sounds like Chinese, let me give you another simple example to illustrate. Let's use the exact same wooden table example so the difference becomes quite obvious. Again, imagine the final table sells for $400, and the tax rate is 10%. First, the lumber company sells wood to the furniture manufacturer for $100, but no sales tax gets charged because it's considered part of production. Then the manufacturer turns the wood into a table and sells it to the furniture store for $300. And again, no final sales tax applies. Finally, the furniture store sells the completed table to a customer for $400. This is the moment where tax finally appears. The customer pays $440 total, with $40 added as sales tax, and the retailer collects that money before sending it to the government. And so, as earlier, the government collected $40 here, but using sales taxes instead of value-added taxes. And that's basically the key difference here. Under VAT, tax gets collected step by step throughout production. But under sales tax, tax usually appears only once at the very end. That is, of course, in theory. The United States is the most famous country when it comes to sales taxes. In America, rates often vary depending on the state or even the city. In some places, there's little or no sales tax at all, while in others, the total can become fairly high. This is also why many visitors are often surprised when they go to the US and realize the shelf price isn't actually the final price. Something might say $20, but the amount you actually pay could be $21, $22, or even more depending on which city you are. So why do so many governments like those in Europe choose VAT over sales tax? Well, one reason is that it offers some advantages for different groups of people. For example, when we talk about consumers, one of the biggest advantages is predictability. In many VAT countries, the tax is already included in the price you see. If a coffee says €4, you usually pay €4. It's that simple. For businesses and governments, VAT has another major advantage: tracking. Since businesses can usually deduct VAT they already paid earlier in the supply chain, there's a built-in reason to keep records and invoices. Governments often like VAT because it spreads tax collection across multiple stages instead of relying entirely on the final retailer. And so, many governments theorize that this tax system can reduce tax evasion because there are more checkpoints where transactions are documented. And so, in a case where one business reports things incorrectly, the records from other businesses may still help governments identify missing taxes and keep revenue coming. Now let's look at the advantages of sales tax, because even though fewer countries rely heavily on it, there are still reasons some governments actually choose this system. For consumers, one possible advantage is visibility. Since sales tax usually appears separately at checkout, people can clearly see how much tax they're paying. Some people actually prefer that because it feels more transparent. The product price is one thing, the tax is another, and you can immediately see how much money is going to the government instead of it being quietly included in the total price. For businesses, especially the smaller ones, sales tax can sometimes be easier to manage because there's generally no system of tracking taxes paid throughout production. Businesses involved earlier in the supply chain usually don't have to reclaim taxes or calculate deductions the way they might under VAT. The retailer at the final step collects the tax and sends it to the government. In some situations, that can mean less paperwork and fewer accounting complications, especially for smaller companies that don't want to deal with more administrative work. And finally, when it comes to governments, they may prefer sales tax because it leaves more autonomy to states, provinces, or cities, as well as being administratively less burdensome. So here's the simplest way to remember everything we talked about. VAT collects tax gradually throughout the production process, while sales tax usually gets charged only once when the final customer buys the product. And speaking of taxes, in many countries, you're required to keep your personal tax documents and information when it comes to income tax, corporate tax, deductions, and all the other possible taxes you might deal with for many years. And so, if you want to keep your tax papers in a quite safe location, in the video description, we share document bags you can buy on Amazon, where you can store your documents properly. Using these links would also help supporting the channel if you do so. Finally, if this video helped you understand these two taxes a little bit better, please give it a like, and watch one of the other videos showing at your screen right now for similar content. I'll see you there.